Welcome to another episode of Limitless Trading. We wanted to just let you know where we are and the trades that we're seeing going into a Friday. Again, we don't trade very much on Fridays. Fridays are choppy, low volume, and after all of this mess that we've been through, the best is to conserve your cash and stay on the sideline. But for those of you who want to take a trade, this is the day that you have. We had said that once we saw the back test of 57.75 on this trend line that broke, and we bull trapped there, we cracked, broke every single support. That means that if you shorted there, you just ran your stops. And we said, don't take a short today immediately on the gap down, because we are very much likely to fling back. So what we said to our guys on the smaller time frame was, hey, let a level back test. And we actually saw that about 55.22 was back testing, which is not the full drop because the gap is around 55.74 is the gap. We hit about 55.64 and then rolled over. But we said this would be the short, an attempt to come back up, right? Because algos are going to pick up on the RSI on the daily and on every time frame was basically oversold. And then you take your second short after a back test down. On the smaller time frame as of this recording, we're defending about 5,400, which is a good round number, but be very, very cautious going long. We want to recover 54.28. The big recovery would be 54.69, and then 54.85 will start covering short to the 55.31, which we said was a support on the previous contracts right around here, last month on March 14th. So you don't want to be shorting oversold. You can absolutely any rejection you could short. This is absolutely bulls are fully in, bears. I'm sorry, are fully in control. But I always say let a back test come in like a 55.31 or the full gap 55.78, and then if there's no confidence in it, or if you see hey there's a trend line coming in that is now into the 22nd, let's say, of April, it could be resistance. You take another short, but you want to short back tests. You don't want to just short the red day, because again, some people shorted and they got, they shorted down here and they got trapped, they got squeezed, then they stopped out, and then we rolled down. So if you shorted, you had to wait you had to wait for the second half of the day to get paid. So play it smart. You don't have to trade every candle. I tell my guys, once a level moves, take your trade and then just move your stop loss. If it goes up, good, let your stop loss do the talking and pay you. If you short, keep it very, very tight, because again, you're trading oversold. Bears are in control, but bears can be squeezed back to a back test. So again, what we want to see is another back test, possibly of the full drop all the way to 55.78. And then does that reject and we roll over, and then we see the full 5,300. Only market makers know that. What we know right now is that they're trying to defend. RSI is oversold. We have some new lows that we haven't seen since since last summer, right? The last time we were this low was August 5th. So let's see if the market can defend these old spots. Right here is we're actually at what day is this? The August 8th support is sitting right here. So the market might say, okay, we'll give you this one. And then again, back test to to this line and then just become, resistance and then just keep rolling over. But you want to short back test because that's when you get the best price. And if you're doing the S&P 500, remember VIX is at 30, which means options are juiced. So if you're trading the S&P 500, whether it's zero DTE or long dated, be very careful, because if you're correct, you say, oh wait, Limitless said that the market's going to back test. Yes, but as the IV goes down on VIX, so does the price of your option, right? The market cools off and the premium comes down. So you could be correct in direction and wrong on your play. So you may want to take shares, take less shares. If you make 5-10%, great, keep it, or switch to futures, because futures won't be affected by any type of IV crush. If it goes up, your contracts will pay. If it goes down and you're short, your contracts will pay also. Where options, directional options, unless you do some sort of call spread or debit spread, any directional options are going to get crushed. So be very mindful. We teach that in our Discord. Speaking of which, subscribe, like, and comment Discord below if you want to join our trading community. But when it comes to levels, again, we want to see a back test, or at the very least, if you want to just keep shorting, let it come back to this, to let's say 54.69, see if that rejects, or the high, which was 55.21, 58.5. Let it retap a high of 55.64 to get a much, much better price to be able to short, because again, you're shorting against a gap. I don't like shorting gaps, because if I short, I might be right, but if I'm wrong, I'm bleeding all the way into this recovery. I like shorting back tests, not drops. You can scalp a drop, right? You could take a little red and do a little bit more red. But again, good likelihood that the market says on a Friday, let's cover into Monday, Tuesday. Let's see, if there's any more news, any changes, anybody's happy or sad, and then roll over. But in general, the market has spoken. We're probably not going to be bullish into tax season. We'll come up a little bit and then just keep rolling over, possibly a hot CPI just to make an excuse for the market to roll over. But do one level at a time. Let something backtest, like I said, like the 55.31 that could become a little bit of resistance. Then short again if you want to short into the 17th, which would be after tax day, and then close all your shorts into tax day, because there's a good likelihood the market will just start going long on the tail end of April. So that these guys right here, these market makers that are trapped, what we call the three wise men that are trapped up here, that are bulls, they're going to want to get out. So someone's going to give them news to possibly, at least, I would suspect that we're going to retest somewhere between 56.29 to get all of these guys out of here. And then these guys up here in the nosebleed section from the Trump run will have to wait till July or August, or maybe May, if Powell gives us a more dovish news, because the trend held, but really we knew Powell was going to calm the market. I suspect Powell's going to be even more calming, because that's his job, is to counter all of this stuff, is calm markets and help market makers get out. But again, if you want to subscribe, like, comment, Discord, or email us, we'd love to have you join our team.